Hello everyone, my name is Sydney Shad and today I'm here to speak with you about a few refundable tax credits available to eligible employers due to the current global pandemic COVID-19. To begin, you need to know a little bit of background information about the FFCRA and CARES Act. First off, FFCRA stands for the Families First Coronavirus Response Act. It was signed by President Trump on March 18, 2020. Today I'm going to explain the refundable tax credits related to this act. This act provides small and mid-sized employers with refundable tax credits in order to reimburse them for the cost of providing paid sick and family leave wages to their employees for leave related to COVID-19. On the other hand, the CARES Act stands for the Coronavirus Aid, Relief, and Economic Security Act. It was enacted on March 27, 2020. It's designed to encourage eligible employers to keep employees on their payroll, regardless of the fact that some employers may be experiencing economic hardships related to COVID-19. Alright, so we're going to begin with talking about the Employee Retention Credit. It is a fully refundable tax credit for employers equal to 50% of qualified wages paid to employees by eligible employers. This credit applies to qualified wages paid after March 12, 2020, but before January 1, 2021. This credit provides up to a $5,000 refundable credit for each full-time employee retained between March 13th and December 31st, 2020. In order to qualify as an employer, companies have to be ordered to fully or partially shut down due to orders from a governmental authority, or the employer has to experience a significant decline in gross receipts, meaning the gross receipts have to fall below 50% of the same quarter in 2019. So an example of this would be if you owned a restaurant that was ordered to shut down due to COVID-19. You would still be entitled to this credit even if you were allowed to have a drive-through or carry-out orders, because it is still considered a partial shutdown. Furthermore, the number of full-time employees the employer averaged in 2019 determines which employees they can claim for their credit. If the employer averaged more than 100 full-time employees, only wages for those retained who are not working can be claimed. If the employer employed 100 or fewer workers, employers can claim wages for all employees, whether they are working or not. So let's talk now about some credits for paid sick and family leave. You need to understand that the FFCRA requires employers to provide paid leave through two separate provisions. The first is the Emergency Paid Sick Leave Act, which is also known as EPS-LA. It entitles workers to up to 80 hours of paid sick time when they are unable to work because of reasons relating to COVID-19. The second is the Emergency Family and Medical Leave Expansion Act, also known as expanded FMLA. It entitles workers to certain paid family and medical leave. The FFCRA makes certain that employers subject to these provisions are entitled to fully refundable tax credits. These credits cover the cost of the leave required to be paid for these periods of time during which employees are unable to work. The Emergency Paid Sick Leave Act requires eligible employers to provide employees with paid sick leave if the employee is unable to work because of any of the following reasons. The first reason is that the employee is under a federal, state, or local quarantine or isolation order. The second reason is that the employee has been advised by a healthcare provider to self-quarantine. The third reason is the employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. The fourth reason is that the employee is caring for an individual who is subject to a federal, state, or local quarantine or isolation order. The fifth reason is if the employee is caring for a child and the school or place of care of the child has been closed or unavailable due to COVID-19 precautions. The sixth reason is that the employee is experiencing any other substantially similar conditions specified by the U.S. Department of Health and Human Services. So if the employee is unable to work because they are placed under quarantine or isolation ordered by the government or advised by a healthcare provider, or they are experiencing symptoms of COVID-19 and are seeking a medical diagnosis, the employee is entitled to paid sick leave for up to 2 weeks or 80 hours at the employee's regular rate of pay, or if higher, the federal minimum wage or any applicable state or local minimum wages, up to $511 per day or $5,110 in total. If the employee who is unable to work because they are taking care of a child due to the child's place of care being closed, or the employee is taking care of an individual ordered by government to isolate or quarantine, then these people are entitled to paid sick leave for up to 2 weeks or 80 hours at 2/3 the employee's regular rate of pay, or if higher, the federal minimum wage or any applicable state or local minimum wages, up to $200 per day and $2,000 in total. As a result, the employer is entitled to a fully refundable tax credit equal to the required paid sick leave. Furthermore, under the expanded FMLA, an employee that is unable to work because they have to care for a child whose school or child care place is closed or unavailable because of COVID-19, these employees are entitled to paid family and medical leave. This amount equals up to 2/3 of the employee's regular pay, as stated before, with a maximum amount of $200 per day and $10,000 total. And the total of this is 10 weeks. The employer is entitled to a fully refundable tax credit for this as well, equal to the required paid family leave. Both credits include the employer's share of Medicare tax imposed on employee wages and the allocable cost of maintaining health insurance coverage for the employee during the sick leave period. The employer is not subject to the employer portion of Social Security tax imposed on the wages. So finally, we're going to talk about advanced funding of paid sick leave and paid family leave. As I previously explained, employers are entitled to receive a credit in the full amount of the qualified sick leave wages, qualified family leave wages, allocable qualified health plan expenses, and the employer's share of Medicare tax paid for leave. With that being said, employers that pay qualified leave wages are allowed to keep an amount of all federal employment taxes that equal the amount of the qualified leave wages paid, plus the allocable qualified health plan expenses and the amount of the employer's share of Medicare tax imposed on those wages, rather than depositing them with the IRS. Federal employment taxes for this case are allowed to be kept by eligible employers, and they include federal income taxes withheld from employees, employees' share of Social Security and Medicare taxes. So the question then becomes, what if the federal employment taxes that haven't been deposited with the IRS are not enough to cover the employee's cost of qualified leave wages? In this case, the employer would be able to file a request for an advance payment from the IRS. And the eligible employer can file a Form 7200 Advance Payment of Employer Credits due to COVID-19 to claim an advance credit for the remaining qualified leave wages and any allocable qualified health plan expenses and the eligible employer's share of Medicare tax on the qualified leave wages it is paid for that year. The IRS expects to begin processing these requests in April 2020. So I'll give you guys an example of this to leave you. If an eligible employer paid $1,000 in qualified leave wages and is required to deposit $800 in federal employment taxes, in this case, the employer would be able to keep the entire $800 of taxes that they would have been required to deposit. Then for the remaining $200, the employer should complete a Form 7200 in order to request an advance credit for the remaining balance. Thank you all so much for listening.